All right, good afternoon, everyone. Futures Brizio here. It is the weekend. It's Saturday, June 28th, 2025. Hope everybody had a great week. And I'm sorry I wasn't on here too much this week. I think I did mention last weekend or at the beginning of this previous week that I was going to be away. So I was away Tuesday, Wednesday, and Thursday, basically on the road. So didn't really do a lot of trading this week. Mostly, I did place a couple of trades, but I wasn't on the charts the way I normally am. So, but what I did want to do today, of course, is just do a quick review, talk about a couple of things, and talk about what we might see next week. All right. So as always, make sure you smash that like button, subscribe to the channel, and any questions or comments, leave them down below. Happy to respond to legit questions. Do get a lot of bots and like weird comments that are just, you can tell, are just spammers and bots. And I just delete those. Obviously, I'm not going to respond to them. I just delete them. So yeah, so let's just jump right in. We'll talk about futures mainly. And let's talk about indicator first. So the last couple of videos, I've been using the CCI indicator, Commodity Channel Index, which again is an old indicator. It's been around for decades, but I really do like it. And I'm experimenting a little bit with this indicator, which is the stochastic indicator, which is also another indicator that's been around for a long, long time. So I'm not going to get into how it's calculated. You can certainly just Google stochastic indicator and you'll find lots and lots of websites that'll show you how it's calculated. There's basically, there are multiple settings that you can use on this indicator. So the default settings are usually 14, 3, and 3. So the percent %K, the percent %D, and the slowing, which is kind of like a smoothing. I think in most platforms it's going to default to 1433 with low and high as the price field that it uses. And then there's a moving, it does use a moving average formula, so it defaults to simple, which I just leave it on simple. You can use exponential or linear if you want. I wouldn't advise smooth. That makes it even slower, but I just leave it on simple. It's perfectly fine. And then for levels, the default levels are 20 and 80. This is a fixed oscillator, means it oscillates between two levels. It's not a dynamic level where, like the CCI is a dynamic level indicator, meaning the upper and lower bands are going to be different on every market that you look at. Whereas the stochastic oscillator is fixed between 20 and 80. And I do drop a mid in here. So obviously between 20 and 80. I stick the 50 in there, which is, cuts it right in half. And so that's why I have these three lines here. And essentially, again, an oscillator is used mainly to help you time entries and exits in a trending market. Like any other indicator, it's not going to work well in a consolidating sideways market. You'll get lots of false signals. And, in a really large range, you could still use the oscillator to trade the bounces between the upper and lower portion of the range. But I just prefer to stay out of ranging markets and use it in a trending market. People will use it for divergence trading sometimes. I don't really use it for divergence. I mean, if it's really blatant, obvious divergence, I'll use it. But again, I'm mostly using it as a entry signal to rejoin an existing trend. It just helps me time it. And as I said with the commodity channel index, the oscillator is really a secondary. The primary thing that I use is market structure, swing highs, swing lows, and again, just general market structure and price action. I'm only using the indicator kind of as a secondary confirmation about a potential good area to get in. Okay. So with this indicator, in this case, so we had this big downtrend going. The best time to look at getting into a trade is when the oscillator gets up. In this case, since we're looking to enter down, short to enter down on this market, we want the oscillator to get up into this upper band here at the 80 level or above. Those are the best entries, okay? Now, I've also found that as long as it gets to at least the 50 level, all right, where this blue line at least touches the 50 level, is acceptable too. If I get a signal after a bounce at the 50 level, whether it's just above or here where it gets in between the 50 and the 80, these are all potential opportunities. But some of these are, basically what happens is, it could just mean, if it doesn't get all the way up here, it just means that the buying pressure in this case to push the market back up is very weak, that the sellers are still pretty strong and it will push back down. But, the ones that have the best risk to reward ratio, in my opinion, are the ones where price, in this case, looking for shorts, where price gets up to, the oscillator gets up to this 80 line, meaning the blue line, okay, which is the slower line, touches that 80 line or gets above it, okay, but it doesn't have to. In this case, like I said, right here, we had it only come up to the 50 line, and then we got a sell signal here, which I'll go over, and the price did go down. Here we got, about halfway between, and then it rolled over and we got a sell signal and price did go down, okay? And here is, where in this market, it looks like we've had a change of direction. The price came up, the oscillator came up, tagged the 50, we got a sell signal, price went down for 2 candles and then reversed. So that's going to happen. So this is basically a change in market structure, which I'll talk about on this one, okay? But that's essentially how you're using it. You're waiting for, in the case of a sell, for this red dotted line, for the blue line to cross back through the red dotted line, okay? And then that's your sell signal. Okay, so you can see it comes up right here, and then right at this point, it pushes through the red dotted line, and that is basically your entry point. So that would be basically, right in here on this candle. So it actually gives you in this case, let me just make sure, actually kind of gives you a sell signal on a bullish candle, which, if you're expecting lower prices, this is actually a really good entry. Okay, so it's actually giving you a signal right here on that candle. Okay, that sell signal, where the red line, where the blue line crossed through the red line actually happened, and that actually would have been a really good signal. Okay, and then of course we had another one right here. All right, every time I do that, it opens and let's see where that actually occurred in the candles. Yeah, basically right here. Got to give it a little bit of, basically right there. Again, basically another blue candle. All right, and then so on and so forth. There was another signal here. Now this one, the oscillator only got to the 50 line, but it did touch the 50 line on the blue. And then we had this signal right here, which on the price chart would have been on this bear candle right here. Okay, that's where the signal came. All right, and then finally we had this one right here. Again, just barely tagged the 50 line, and then the red line crossed through. Where is that on the price chart? Well, it's basically right here at the close of this candle. And like I said, on this one, it did go down one more candle, and then it bottomed out, and then we, what I would say, now have a change of direction. So this one maybe wouldn't have worked out unless you were just scalping this, or maybe you just broke even. I don't know, small loss, but this is what happens when you have a change of market. All right, so again, we were not looking for any long positions here, so we would ignore any time where the oscillator would come out of the 20 range and go up. Okay, if we were looking for longs, we're in a bullish trending market, then we would ignore these sell signals and we would only take buy signals off of this area. But because we're only looking for sells, we would ignore all these buys. Okay, now this is natural gas, And so, like I said, it looks like we have a change of direction, right? So we had, after this move, you can see we've had a very bullish run up. We put in, a higher low right here, higher high. We've broken several market structures. I mean, the last legit one was, was right here. All right, this was the last swing high right here. This indecision candle, and we've obviously cleared that. We cleared this structure right here. We've cleared this structure right here. So, this is pretty plain to see that this is in an uptrend. So now if we're only looking for longs, we flip over and we look here. And again, we had the blue line come in, this time dip just below the 50 line. So this is technically a long entry. It didn't come all the way down. This is the ideal for it to come all the way back into this area. But it did dip below the 50. And this just means the buyers are really strong, and it just the selling pressure was not there to push the oscillator lower. Okay, so we'll just borrow this one. We had this signal right here where the blue crossed through the red right here. And that would have happened basically on this candle right here, which obviously even if you weren't using the oscillator, you could say that this was a good entry signal right here. Okay, at the close of this candle, and you could have just held this long. Okay, so basically going into next week, I am looking for longs. And, essentially, I'll probably target a major swing area, which is way up here. And this is only a 1 hour chart, so it wouldn't take it too long to get here. But, this is the extreme swing that led to this downtrend. So I think all of this area in here is certainly viable to target to the upside. So essentially what I'm looking for now is to, again, have this oscillator come back down and either hit the 50 or preferably get down into here. All right, and then we're going to wait for the you're going to look at the price action, and hopefully you see the blue line, the blue and the red line will come down together, and then you're going to look for that blue line to cross back through the red line, hopefully somewhere in here. And at that point, hopefully you see a nice pullback and then a bullish candle forming at the same time. You see that crossover, and then that would be your entry signal. In the meantime, there is no entry. Okay, so again, your ideal spot is to have the oscillator either in a bearish market get above the 80 line, in a bullish market have it get below the 20 line, or at least to the 20 line or up to the 80 line, and then wait for that crossover back down. Okay, but the midline 50 is viable too if you get a valid signal at that. It just means your risk to reward ratio may not be as good, but then again, there are some really good trades that come out of those. So as we saw right here, right, we just talked about this one, right? You could have held this one all the way down. The entry was here. It wasn't a very great signal, just barely tagged the 50, but it came from here all the way down to here until this price finally reversed. Okay, so it doesn't mean those aren't viable. It just means that it may not present the best risk to reward ratio. Okay, so that's for natural gas. Let me just clear all that off. And that's what I'm looking for. Bullish price action. If you're going to use the indicator, that's how you use it. Okay. Okay, on to corn. So corn is interesting. We could be seeing a change of direction in corn. We had this nice downtrend going, and it was clearly making these nice swings. We had this swing right here, okay, that happened on, this is probably Thursday, I guess. Let's see what the date is on this. I'm guessing this is Thursday. Yeah, this is the 26th. This was the last sell signal we had right here, okay? Price came down. Now, one thing to note that could potentially warn you about price reversal is we had this low that was put in, then price came up, right? Price came up right here, came down, failed to put in a new low right here. Okay, see how it came down here and only made an equal low. It had this really weak bounce, came down, and then we came back up and essentially broke market structure. Now, sometimes this does follow through and comes down and makes a new low. So you can say, okay, well, this is a market structure high and then price is going to come down. You can see it did not. We extend this line over. We actually put in a higher low right here. Price came down, put in a higher low, right? It didn't even come back to these two lows. And now it's gone up and taken out this area. Okay. Now you could look back here and say, okay, well, this is our next zone right here. So, if we break this zone, then that for sure confirms an uptrend. But, we are already putting in higher lows, right? We had this higher low right here. Okay, when price, and then we certainly have a higher low right here. All right, and a higher high and a higher high. So to me, this is potentially, this market is turning around to go bullish. Now, again, I think when we get up to this area, which we probably will do on Monday, I'm guessing, we'll have some kind of reaction to the downside, okay? And this is where you have to use your market structure. So if we get up here and we pull back, that's fine, as long as we don't break the previous swing low in this market structure, which is this. So as long as this comes up and then comes back down, as long as this area doesn't get taken out, that's just a pullback, and that would be a good buying opportunity. And again, what we would want to see on the oscillator is as it comes up here and starts to pull back, that the oscillator then will pull back again, at least to the 50 line, maybe lower, okay, maybe ideally down here. You'll see that pull back somewhere from between the 50 and the 20 line, and then we'll wait for bullish price action to form and the blue line to cross back through the red line, because these two lines will come down together. And then, obviously look for a move back up, and that would obviously on the price would look something like this, right, where we have price pull back, and then we'd get a nice bullish candle, and then go up and start obviously making new highs. And again, if we get through this zone right here, then we're definitely in an uptrend, okay? But it looks pretty good right now, because if you look at the previous pullbacks on these on this chart, on this 1 hour chart, if you look at these previous pullbacks that led to new lows, there was nothing this significant, okay? And so I just want you to keep that in mind. So now I'm not going to get into price divergence a lot, but for those of you that know what price divergence is, it's basically when you use an oscillator, any oscillator like the stochastic. Basically what it means is that price makes a new low, but the oscillator does not. So you can see right here, we had the oscillator come down right here, put in this low right here, which is equivalent, which is this price right here. Okay, so we had, I'll just use these. We had price make a new low right here, but look at the oscillator. Okay, look at the oscillator on this low. Okay, so it put in a new low on the oscillator right here. Okay, so that's fine. All right, so that's good. But look what happens on the next time it does. Now we have this low put in right here. Okay, but look at the oscillator here. The oscillator is higher. All right, this low on, even though it made a new low on the price chart, the oscillator did not make a new low. Okay, that's called divergence. And then we had reinforced that divergence on the next time where it came down, okay, and it failed to break through this low over here. It came down right here. Look at the oscillator again at that spot. Okay, oh, I can't drag it through there. Look at the oscillator at that spot. It's even higher. So this is telling you that the sellers are running out of momentum. All right, so that's what price divergence is. Again, I'm not a big divergence person. When it works, it works. But many times you can get divergence and the price just continues on in the same direction. So divergence does not mean price is going to reverse, okay? Because again, you can get multiple divergences on a chart and still have the trend continue in that direction. Now, if you start getting multiple divergences, it does mean that the direction of that trend probably is weakening, and you should at least be on the lookout for a potential top or bottom coming in. But I would not take a trade signal strictly based on divergence. especially on shorter time frames like the 1 hour or lower, because again, you can get several divergences and still have the price continue on in that direction. In this case, it was a good harbinger of this potential reversal we're seeing, but that does not always is not always the case. I've seen plenty of divergences, and you can probably look on your charts and find them where there's price divergence, and yet the trend continues on in the same direction. Okay, and so that's why I won't take a trade based on that. If the other signals on the chart and the price action support it, then and I see a divergence, okay, well then that's a confluence, right? It's multiple factors coming together. But I'm not going to take a trade just based on the oscillator showing me some kind of divergence, okay? Just not going to do it. But again, that's what price divergence is. It's when the price makes, in an uptrend, the price makes a new high, but the oscillator does not make a new high. All right. Or in a downtrend, the price makes a new low, but the oscillator does not make a new low. Okay. And again, I would suggest if you don't understand divergence, price divergence, just Google it. You'll probably be able to find plenty of examples, or look on your own charts and just, pick out the areas of divergence. And you'll also see areas where you get divergence and yet the trend continues. Okay, but a divergence could also just mean that there's, again, not necessarily a price reversal, but that a pullback is coming, right? And that's sometimes what I said, a failed divergence. Where the trend continues, the divergence is maybe only suggesting there's a small pullback coming, but that the trend is not over. Okay, so again, I'm using market structure. I want to see market structure broken. And what the oscillator is telling me is only second hand, is only the second level of confidence. So let me just clean this up, get all these arrows off. Okay, so anyways, for corn, again, I'll just draw two rectangles back in. We've got this area right here. All right, so this is kind of the next area of interest. If price fails here and we get, strong bearish price action, then perhaps this downtrend continues. I think we most certainly will see a reaction off of here because everybody else is seeing this area. But as long as this kind of area down here holds, price pulls back off of this zone, as long as this area, because this was the last major swing point on this time frame, as long as this holds, then the uptrend is still intact. So price can come down here and watch the oscillator and potentially look for a long. And if it does finally punch through here and we get a close above this high right here, then certainly I think we'll move quite a bit higher. All right. So on to soybean. This is almost the same thing as corn, so I'm not going to dwell on it, but you can see if you look at this recent price action the last couple of days, it's essentially what we see in corn, right? We had price come down here, made a new low. Okay, we came up here. We had this pullback right here. We did have the oscillator give a sell signal right here, or it came up and touched the 80 line. All right, so this was a valid sell signal, but as you can see what happened, price did not continue down, failed to make a new low. It didn't even come back to this low, and then we punched higher. Okay, so is this a potential change in direction? I don't know. I guess we'll see, right? And so, which means this would be a higher low right here. All right. And if we continue now, then, we would expect to see higher prices, and then we would then, shift our bias to the upside, which again, from the oscillator standpoint, we'd want to see the oscillator come down to at least the 50 level, preferably to the 20 level or lower. And then as a turn back through where the blue line crosses back through this dotted red line, and along with seeing a nice bullish candle on the chart, and again, this is all 1 hour chart, then that would be our signal. Okay. And so we'll see what happens. Okay. But again, if you look at this downtrend and all these pullbacks, they all have in common, right? Small pullbacks led to a new low. Well, now we've got this much more complicated, with this higher low. So this is kind of, when you just look at this price action and then look at this, that potentially we're going to go higher here. So I'm not saying we will. I'm not telling you to jump in. You got to make your own selling or buying decisions. But I'm saying just looking at the price action and what the market's doing right now suggests to me that perhaps we're going to see higher prices. And again, just like corn, you just basically look at this area right here. This is now becomes our swing. And if price pulls back, as long as it holds this area, then I would say we are in an uptrend. Okay. So let's see what happens with that. Okay. So this is soybean oil. I'm still debating whether I want to keep soybean oil. I find that it moves very, very slow. It goes days sometimes without making any progress at all. And I think it's just the fundamentals of this market, with the big movers and shakers that move this product. It just doesn't have the volatility and the volume. And so it can go like days. You can see here many, many days without doing anything. And then all of a sudden it'll make a little move, and then it'll go 2 or 3 days again without making any progress. So, in terms of this market, little hard to determine right now. You can see we do have this big gap on the price chart, and the price seems to have come back here and trying to fill this gap. It hasn't completely filled it. So I would like to see a little bit more, but I guess I'm leaning more bearish on this market now versus bullish, where it clearly was bullish. We have come down here and look like we're trying to make some lower lows and lower highs here. But it's a little unclear, so I'll sit and watch this. This is the 4-hour chart. So, we're basically, again, inside of a range. Right here, we're in this range. And so I'd like to see this kind of figure out what it wants to do in terms of this range. Are we going to break out here and start moving back higher, or are we going to break down? So I'm probably going to just kind of sit on the sideline with this one until it decides what it wants to do. I think it's a little unclear at the moment. All right, on to NASDAQ. Again, NASDAQ is clearly still in an uptrend right here. You can see we had a nice pullback here on Friday, and then the last couple of hours of trading, we had this bullish candle that formed right towards the end of yesterday's session. So, from a standpoint of pullback areas, we've got this right here. We've got this one a little bit lower. So again, I'm overall still bullish on this market until we can confirm that either takeout structure, or again, we start seeing low. So like if this high fails and then we start making a new low and we come down and take out this, then that would suggest, okay, we're starting to put in lower highs and lower lows. If this holds now and we go up and make a new high, then this will become our swing point, in which case, I would take this, rectangle and, move it over here somewhere, probably go to a shorter time frame and find a better place to draw it exactly. But let's just say something like that if this holds. But if we now break through here and now we put in, this turns out to be a lower high right here, right? This turns out to be a lower high, and we come down and break it, then that would potentially change my outlook, at least in the short term, to more bearish. But you got to respect the uptrend that's here. And in that case, if we look down to the stochastic, we have broken through the 50 line, but it looks like late in the day on the session, again, this is the end of the day, so you have to kind of take that a little grain of salt. The blue line did cross back through, but I would like to see it cross back through the 50 line. And that's because of this big bullish candle right here. We got that. So let's see what happens. And if we continue the uptrend just based on this, it is in a bullish stance right now. And I don't see any reason to change that unless we, come down and, like I said, put in a lower high at the point where price is now. If that turns into a lower high and then price breaks lower. But if not, I'm still looking for longs. All right, and then lastly, we have 10-year yields. And this one, again, makes pretty good patterns, okay? And you can see the most current price action as of Friday, and I am, you can see I'm in a short position. I took this on Friday. I'm holding it through the weekend, which can be a little risky, but whatever. I think it'll be fine. This is not a really super volatile market either, but it does make good patterns. And so you can see on the stochastic, which again is, we had this sell signal came in right here, which is basically on this high. Now you can see what happened. Price poked down, came up, and just missed my stop loss. Came back up and tried to grab some more liquidity right here, and then ended up closing the day, back below my entry price. And so we'll see. In terms of a swing level, you know, I suppose you can make an argument that this is a swing point right here and that we've now broken that. But I don't find that one to be too strong. I would rather look at this one. So I'm looking at this as being kind of the swing. Okay. But, this one could be valid too. And if this one is taken out and price goes higher, then we probably will go higher. But, I'm looking basically at, this area right here as being our kind of our structure area. And as long as price stays below here, then, anticipate lower prices. But we do have a signal here for this short on the stochastic. And so I'm holding that, and we'll see what happens. If it goes up and I get taken out, that's fine. Then I'll stand aside and I'll wait to see what happens as price comes up into this zone. If we punch through and take out like this high, and then we start moving higher, then fine, then my bias will switch to the upside. So for now it's bearish, and like I said, if I get taken out of this position, then I'll wait and see. I expect price will come up into this rectangle somewhere, and then will we get rejection and head back down then, or are we going to swing and go higher? And like I said, the first thing I would have to see is this high and this wick to be taken out, okay, to see that start to turn and go higher. This did mitigate a fair value gap. You can see we had imbalance between these three candles, right? And again, I'm not a big fair value gap imbalance person, but when it's obvious, it's obvious. Again, we have this, the bottom of this wick did not approach the top of this wick. We have this big bearish candle in between, so this is imbalance between here and here. And price came up and wicked into that area right here in between. All right, basically cutting this bear candle in half. So this area has been kind of mitigated. So if price does get through here and go higher, I don't think this area will hold. I think price probably will continue and go higher if this rectangle area does not hold and we proceed to go higher. Okay, but for now I'm still in a bearish. I still have bearish bias, but again, I wouldn't be totally surprised to see price turn and come higher and retest this zone. But like I said, the question will be, does it punch through here, in which case I'll turn more bullish, or does it fail and then the real new low comes in. But either way, we did get a signal on the stochastic again at this point where I'm in this position, and so that's why I'm going to hold it and see what happens. All right, so that's futures. I'm not going to spend a lot of time on Forex. The only thing I wanted to say with Forex is you can see the indicator I'm using here is the CCI, which is the one video I made last couple of videos making this, and this is a 21 period CCI. I do not find the stochastic as useful in Forex. Forex is so weird and volatile and manipulated. Even if I change the settings on the stochastic, and the default settings on the stochastic, see, I'll put it on the chart. Because I think I already had it. Okay. Yeah, these are the default settings on stochastic 1433. And you can see that's what they're set here. And I put that on the chart. All right. And to me, this is pretty busy and noisy in terms of it, bouncing off the 50 level and getting buy signals here. These turn out to be a lot of false signals. So I would recommend either one, if you like either one of these indicators and you trade Forex, I would do one of two things. I would either stick to the CCI, which is a little slow. Keep it on like a 21 period CCI, 20, 21 period CCI. Or if you're going to use the stochastic, only take signals that get into the extreme zone. So ignore these signals off the 50 line. Okay, so maybe you just take the 50 line, off of here altogether and just don't even look at, you know, so we'll just, take the 50 line off of here. All right, and only trade signals that come into the, in the direction of the trend that come into the the extreme. In this case, since we're in an uptrend, we only want to trade longs when price gets down or below this 20 line. Okay, and ignore any of the signals in between. You may very well miss some trades that way, but that's the only way I would use stochastic. I would not use the settings. Now I had it on the on futures. I had it at 533. That's way too fast on Forex. You'll get so many false signals. It's not even funny. Even ones that come into these extreme zones. So in Forex, if you're going to use stochastic, I would keep it on default settings 1433 and only take continuation trades if the oscillator gets into, in this case, again, in an uptrend, gets into this 20 or below range. If you're in a downtrend, only you want to take the sell signals when price gets to or above the 80. And again, since we're in an uptrend here, we're not taking any short signals. So we're ignoring this one, ignoring this one, ignoring this one, because we're in an uptrend, okay? So if you take every one of these signals and you are not taking the trend into account, you're going to get killed, okay? So only take them in the direction of the trend that's on the chart, okay? And if you're not sure, if the trend's not obvious, then don't trade it. It's that simple, okay? But again, so let me repeat that one more time. If you're going to use stochastic in Forex, use the default settings 1433 and only take continuation trades off the extreme zones, not the 50 line. And like I said, I just took the 50 line off of here and that's it. Okay, so I'm not going to sit here and go, because the video we're already at 37 minutes. So I think I'm just going to wrap it up. You get the picture. You can go through your charts and look at these. Like I said, I trade more futures than Forex anyways. I do have a small Forex funded account that I use, but I don't take a lot of trades on it. It's really not a big focus, but like I said, I have kind of a soft spot for Forex because that's how I started my trading. So anyways, so I'm going to leave it there, guys. Again, questions or comments, leave them down below. Make sure you smash the like button on the way out. Subscribe to the channel if you're just finding it for the first time. And I look forward to speaking to everybody this week. It will be a short week of trading in the U.S. this coming week because it's Independence Day on Friday. So I suspect Monday, Tuesday, Wednesday will be decent trading, but I suspect Thursday will start to slow down and Friday will be a no trade day. So just because of the holiday. All right. So, but we should get some, hopefully get some action early in the week. Things do tend to slow down in all these markets in the summertime because a lot of the large hedge funds, the big traders that move the market, they're on vacation just like a lot of other people are. And so that can lead to low volatility periods during the summer, but it doesn't mean we won't get, movement. Just understand that volatility and volume does slow down oftentimes in the summer. So all right, so that's it, guys. I'll leave it there. I hope everybody has a great rest of your weekend. And again, leave any comments down below, and I'll talk to everybody next week. All right, thanks.